time. That's what we're doing. So I might go to Bank of America and get a credit card today, but credit card stacking would have me going to Bank of America to get a credit card today, Wells Fargo to get a credit card today, Regions Bank, right? Navy Federal Credit Union. That is credit card stacking. It's basically where we're going out and instead of getting a credit card, we're actually going to get multiple credit cards at exactly the same time. Now, why the heck would we do this? What's the benefit of credit card stacking? And by the way, if you're just coming in, tell me where you're coming in from and tell me if you have yourself actually dealt with credit card stacking. I'm really interested to know. Okay, so first of all, now that we know what credit card stacking is, getting a lot of credit cards in a very short period of time, what is the benefits? Well, one of the first benefits is just easy access to capital. And here's what I mean. When we look at the types of money that's available to us as business owners, let's just put them into three simple categories. We've got credit cards, we've got loans, we've got credit lines, right? There's three main kinds of money that you and I all know about. And hey, what's up, Lexus? Feel free to ask your question. And I want to make sure that you get it, that I get it answered. And Yusuf, thanks for coming in. So that being said, the benefit of credit card stacking is that when we look at the easiest access to capital, we look at loans, credit lines, and credit cards. Those are the three main ways we can fund our business. Right? Don't get me wrong. There's venture capital. There's a lot of other stuff. These are the main three debt forms of money. Now, the thing is, if we look at these three, credit cards, credit lines, and loans, credit cards are the easiest of the three to get, like way easier than loans and credit lines. How easy? Well, almost all loans and credit lines require some form of manual underwriting. A human has to look at that application to make an approval decision. Credit cards are basically automated by computers. So that means that if we understand the algorithms that the computers use to approve us, then we can work within those algorithms to typically get approved on the spot when we actually apply. So credit cards are very easy to get because we can get automated approvals from the lenders and credit issuers' computer systems. We're not relying on a human to actually underwrite it. When we look at loans and credit lines, humans are underwriting those. They usually want bank statements. They want income documents, profit and loss statements, balance sheets in some cases. So none of that stuff's required in credit cards. So if we look at credit cards are unsecured. We don't need any collateral to get them, right? We don't have to have it manually underwritten by an actual human, which takes longer and has a better chance of us getting declined if that happens. We don't have to provide any income documentation either. There's no bank statements and P&Ls and tax returns. None of that stuff is needed. So when we look at this, credit cards are the absolute easiest way for us to get money to grow the business. Now, that being said, I'm going to say, hey, DL, what's going on? DL says, hey, I did a credit card spree in May through July. I think it was 6 approvals, different credit limits, personal credit cards. So DL can relate to this. DL is doing credit card stacking now. And Lexa says, hey, I'm trying to start me a business this year and work on my credit. That's awesome. So there's a couple things that you need to do. Lexa says, if you want to make sure you get started on consumer credit repair, if you have it, and you should also look into business credit. And again, I'm going to throw something on the screen for you to check that out. It's at creditsuite.com/EIN. Is a really cool free place to go to actually be able to get a step-by-step guide that will help you build business credit. Those will get you started on the right way as you are starting to grow your business. So thanks for coming in, everybody. All right, so first of all, credit card stacking. We are stacking multiple different types of credit cards we're getting in a very short period of time. Okay, why would we do it? Because loans, credit lines, and credit cards are the main three ways to fund our business. Credit cards are the easiest of these three because it's unsecured, no collaterals needed, it's no doc, there's no income documentation needed, and computers are making the underwriting decision for us. We're not getting manual underwriting, which takes more time and gives us a greater chance of actually getting declined. So this is one of the major benefits of credit card stacking. Now, the other nice thing about credit cards is that credit cards are very, very simple to get your limits increased. So, for example, I was just talking to somebody the other day. He said, hey, man, you helped my brother use credit card stacking to get $70,000 in credit cards. And he said he got his limits raised, and it's been a year, and now he's at $150,000. This is very common, that in about 6 to 12 months, the limits on those credit cards can be doubled. And this will continue to happen. So this is the only thing that's like that. If you go to get a credit line or you go get a loan from a bank, they don't just automatically raise the loan amount or raise the limit amount. But credit cards will. Discover, you can submit for a credit line increase anytime you want to. The rest of them, about every 6 months, they let you submit for a credit line increase. And if you're using those credit cards, then you're going to get the increase. So it's another huge benefit here of credit card stacking is that with credit cards, we get even higher limits, higher and higher and higher limits the more that we're using that credit. Another benefit of credit card stacking and credit cards is that it's perfect for startups. Because it is no doc, we don't need bank statements and tax returns, then it's a perfect for a startup business. Like we actually were just hearing here, and I'm going to pull this off the screen, but we just had somebody come in and saying, hey, look, I'm just starting my business here, right? So if you're just starting your business, then I'm trying to find my chat again. If you're just starting your business here, like we were just talking about and Lexus is doing, then the nice thing is you can use credit cards easily to get money to start a business because you're not actually coming in and you're not actually supplying any income documents. So whenever I hear the term no doc on any kind of business financing, well, I already know that that's perfect for startups because I don't need to have any kind of bank statements. I don't need to have any kind of tax returns. I don't need to have any kind of profit loss statements or anything like that. It's another reason that this is absolutely perfect. And Lexus says, hey, what banks actually offer the no doc? Well, the no doc is really offered on credit cards. All kinds of credit cards are actually, this is possible for every kind of credit card. And we're going to talk about how to be able to get this program a little bit as we go too, because I know Lexus wants more information on that. So all credit cards are no doc. It's what makes them perfect for startups because, again, we're able to come in and get funding without collateral, without us verifying any cash flow. So we don't have to be in business 6-12 months like a lot of other kind of funding out there. The other nice benefit of credit cards is we typically can get approved right away. I mean, we can typically get approved right away, whereas credit lines and loans may take days, weeks, or months to actually be able to go through an approval process. And once they approve us, they're usually getting us our actual card to use somewhere within 3 days to 3 weeks. So typically somewhere within a week to 2 weeks, we're getting the money to actually use for those credit cards, right? So a lot of different benefits. So the other benefit of credit card stacking and credit cards is that we're getting 0% interest rates for a time period. Usually it's about 18 months of time. Loans don't do that. Credit lines don't do that. So we can come and get a credit card or credit card stack and get multiple credit cards. And now we've got 0% interest for up to 18 months. So if I'm just starting a business, this is perfect way to fund the business because it keeps my payments really low while I need to gain momentum on the business so I can start generating revenue to start paying that credit off, right? So a lot of benefits here. There's a lot of reasons we would want to do credit card stacking. Another reason is a lot of the credit cards that we get, if we're smart and get the right ones, report to the business credit reporting agencies. So now we're getting credit lines, maybe even to start a business, or credit cards to even start a business, and they report to the business credit reporting agencies, Dun & Bradstreet, Equifax, and Experian. And the result of that is that means that those credit cards will then help us build business credit. And the more we build business credit, the more we get away from personal guarantees. We get away from personal credit checks where our credit isn't needed and we don't need to have personal liability for the money that we're actually getting. Now, Eddie's coming in and said, hey, Eddie from Alaska, I've been following you for a minute now. I teach special needs kids and started Shiny Heine Auto Detailing. Shiny Heine, I love that. In 2017 on my own to teach job skills to special needs use in Anchorage, Alaska. That's awesome, man. Eddie, I love what you're doing. Thanks for coming in. So again, a lot of reasons we would want to use credit card stacking or credit cards here, right? It's unsecured. We don't need any collateral. It's no doc. We don't need to supply any income documentation. We get 0% rates for up to 18 months. These credit cards help us build business credit. They're easier to get than any other kind of financing that's out there. They're fast to get. We can get immediate approvals and usually get our money within a week or less in a lot of different cases. And it works great for brand new startup businesses. And it also works great for people that are in high risk industries. So again, now we think there's no time in business requirements. It's unsecured. There's no revenue requirements. Most of the things that will get you turned down for business financing do not apply when it comes to actual credit cards. So there's a lot of reasons that we want to actually use credit cards to fund our business over anything else. Now, what makes credit card stacking so unique compared to going to get a credit card on your own? I'm going to give you an example. We had a guy that came in with an 800 credit score and wanted money to fund his business. We offered him credit card stacking, a program called Credit Line Hybrid, and he said, hey, I don't want to pay that fee to that funding source. So we got him the help with everything he needed to go into his bank to get his own funding. It was a brand new business. The bank wouldn't give him a loan or a credit line. They would give him a credit card. His credit card was for $12,500. I still remember this to this day. He got approved for $12,500. Now, with credit card stacking, we had him approved for $75,000. This is very common. When you use credit card stacking versus going to get your own credit card on your own, you're typically going to get 5 to 8 times as much money by stacking the credit cards instead of just going out and getting one credit card at a time. So if I go to get a credit card at Wells Fargo today, I might get 10 grand. But if I credit card stack today, I may end up with anywhere between 50 to 100,000 in financing. So I'm oftentimes going to get 5 to 8 times more money than I'm going to get on my own. Why? Because this is a common mistake I see entrepreneurs make when they're trying to get money. They're trying to go get all their money from one source. But the one source doesn't want to give them all the money. The one source will give them money, but a little bit. So the key to getting the most money for your business is to get a little bit of money here, little money here, little here, little here, little here. Then when we start adding it together, it's a lot. It may even be more than what you tried to get in the beginning. But trying to get $100,000 from one bank is hard to do. To be able to get $10,000 from 10 banks is easy to do. So by getting a little bit of money from each source, it helps make it easier for us to get money, and we're able to get even more money that way. That's why if you try to go out today to get a credit card, you may get 10 grand. But what's going to happen is if you go to Bank of America today and get 10 grand, and then tomorrow you try to go to Wells Fargo is either going to deny you or they're going to approve you for much less money because Wells Fargo knows that you already applied with Bank of America. Now, how do they know that? You may be thinking it's because of inquiries on your credit. That's not the case. The banks own a third-party data aggregator, which means this third party, all this third party does is goes and gathers data, and they share their information openly. That's the way it is. It's called the financial services. So with this financial services product, what happens is they actually go out and banks communicate with each other about what's actually going on. So that means that when you go to apply for Bank of America today, Bank of America is telling Wells Fargo that you just applied. So when you go to Wells Fargo tomorrow, Wells Fargo already knows that you just applied with Bank of America. They already know that because they're openly sharing information with each other. This is why Wells Fargo knows that you're out applying for credit cards multiple places. They're either going to deny you or approve you for a smaller amount because they know you're already out there applying for funding in other places. This is the problem with getting one credit card at a time. Now let's look at how credit card stacking solves that problem. So credit card stacking solves the problem because with credit card stacking, we're going in and getting a lot of different credit cards at the exact same time. So the banks don't even have enough time to communicate with themselves before you actually do this. Now, there's nothing unethical about it. Just don't lie, right? You want to be honest about your income or your projected income or whatever they're asking you on the application. But all we're doing is we're coming in and getting a lot of credit in a short period of time so the banks don't communicate with each other enough for you to get denied because they know you're out there applying with several different places at several different times. Okay, so something to think about. Now, I want to answer some questions. DL says, hey, when a bank does a credit check, do they check employment with check systems? Applications are on stated income. What if you don't have a job at the time? They don't look first of all, check systems has nothing to do with employment. Check systems only looks at how you manage your bank accounts. And check systems is really most oftentimes used when you open a bank account for them to make sure that you haven't defaulted on other bank accounts. Check systems does not keep, look at, or reveal your employment data, DL, so you are fine. Now, LexisNexis will show where you're actually working or where you've worked in the past, but it doesn't show if you're currently employed or not. It just shows your past work history. So that's some things to keep in mind. Okay, now, and Trucker Devin comes in. I have a personal bankruptcy from 2019 showing up on my Experian Business LLC. Can I get it removed? Yeah, you can get anything removed from business credit reports. You just want to dispute it directly with the reporting agency. So I get your Experian report. If it shows on your Experian report, then you can go directly to Experian's credit monitoring service for business credit and dispute it right there. And by the way, I would pull your LexisNexis credit report first and see if it's on your LexisNexis. Most people don't realize this, but public records like bankruptcies that show on consumer and commercial credit reports, most of that data comes from LexisNexis. So if you go to LexisNexis first, dispute it with them, get it removed there, then you went to Experian. Experian's almost always going to remove it because you remove it from LexisNexis. Experian, you dispute it. Experian verifies with LexisNexis and sees it's no longer there. Then they remove it. That's the way that process works. So a little piece of advice is I would actually come in and dispute that with LexisNexis first, and that is going to give you the ability. And by the way, same in consumer and commercial. Anything public record-wise, LexisNexis is where the bureaus get their data. Dispute it there, then dispute the bureau. It's going to give you a much better chance of getting that removed from your credit report. Now, Eddie says, "Hey, I just can't get the equipment I need to add my business. Is credit cards a smart way to go?" So here's what I would do, and I love this question. I'm going to throw this question up on the screen. Here's a common mistake business owners make, and I'm going to help you avoid it. It's going to save you a ton of money. If you are trying to get a special kind of financing like equipment or inventory or real estate, you don't want to go get a loan or a credit line for that. You want to go get special financing just for that purpose. So for example, Eddie's saying, "Hey, if I get a piece of equipment, should I go get a credit card or credit line to buy the equipment?" The answer is kind of. What I mean by that is at first, you want to go get equipment financing for the equipment you want to buy. Equipment financing usually will cover 100% of your purchase, and they'll ask for first month and last month's down payment. So what I would do if I were in this situation is I would buy equipment using equipment financing. They're going to say I need a $2,000 down payment, whatever it may be. I would get a credit card or credit card stacking and use that to pay the down payment. So that's a smarter way to do it. Equipment financing buys the equipment. Your credit cards or credit lines or credit card stacking pays for your down payment. Then you still have all that available money on the credit lines and credit cards to be able to use for other purposes. That's the smaller way to do that. And Lexus says, "Hey, so when I call, who do I need to ask?" You could just ask for me or ask for anybody. And our phone number is right on our website, 877-600-2487. And DL says, "You're right on the same day applications." Look, this is very, very, very spot on true. Because again, the bureau, you have to understand, banks openly communicate with themselves or with the other banks. So the way credit card stacking ultimately works is what we're doing is we're strategically coming in and applying for a lot of credit cards at exactly the same time. Probably about 5 to 10 of them. Now, do you want to do this on your own? Probably not. You probably want to work with a funding source to do this for you. Why? Because you really need to research the right credit cards for you and know the right credit cards for you before you start applying. If I go look at Barclays Bank or Bank of America, and I say, I want a business credit card with Bank of America or an American Express business credit card, do you know how many they have? I mean, they have anywhere between 20 and 100 different cards. So how do you know which is the right one for you? Well, you can either hire a funding source to do this for you, or you could do a ton of research to find the right credit cards for you. Now, that research should include what are their actual underwriting requirements. And here, I'll show you something interesting because we're working on this right now as part of adding more funding to available for our clients, right? So this is going to be really interesting for you because I think you're going to see how you can actually do this for yourself. I didn't plan on showing this, but I will show this to you right now. Okay, so let's look at this for a second. So if I come in here, this is how we do this research internally, and you could do the same thing. So we come in and we look at credit cards, right? Let's look at personal. These are good credit business credit cards. These are subprime business credit cards, right? So if we look at this, we see here that these are good credit business credit cards. We see the credit card issuer. We see the name of the card. We see their credit score requirements. We look to see if they do a soft or a hard credit pull. We're looking at limits, terms, the link to actually get approved, right? So this is how we do research for every single source that we look at to add to our back office. Now, I've got a list of thousands and thousands of these, but this just goes to show examples of how this works. We do the same thing with personal loans, with micro loans, right? This is how we start to be able to gather all of our data. Here's a look at personal credit cards, right? Here's every card issuer. Here's the name on the card. Here's the credit score requirement. Here's whether they do a soft or a credit pull, secure, unsecure. you get the idea here. So this is the information that we're getting on every single card, and you should be doing the same thing. If you're not working with a finance source, you should be looking at a log for yourself of every card you think may work. What are the actual credit score requirements? Do they do a harder or soft pull? All these things. Now, why do I care about that? Because a hard inquiry shows in my credit report, a soft inquiry doesn't. So I'm probably, if this is if upgrade is as good of a card as Blaze, well, then I'm going to go get upgrade first, because upgrade's a soft inquiry. It doesn't hurt my credit. So I'm going to go out. If all things are equal, I'm going to come in and get the unsecured cards with soft pulls first, because it doesn't hurt my personal credit. Now, keep in mind that this credit card, if it's issued by a major bank, it's still known about by other banks. The inquiry isn't how they know. They know because they're actually sharing information openly. But again, if you're going to do this on your own, this is the kind of information you're going to want to know to find which is the right card for you. Now, the other thing is you're really going to want to come in and you're going to want to also know who do they report to? Do they report to the consumer credit reporting agencies or the business credit reporting agencies? It's a good idea to ask them where they report to. Do they report to TransUnion, or do they report to Dun & Bradstreet? Or do they report to your consumer TransUnion report? I also ask them who they pull credit with. Hey, who do you pull credit with to meet the approval? And sometimes you'll deal with morons that don't know. I shouldn't say that. Sometimes you'll deal with uneducated people that don't know, right? You call into PNC Bank and you say, hey, PNC Bank, who do you pull credit with and who do you report to? And you might have, and if somebody goes, oh man, get them off the phone, call back and talk to somebody else. So I had this with PNC Bank. I got a really enticing credit card offer, and I called him up and I said, hey man, where do you report my credit to if I get this credit card? It's a business credit card. He said, we report to your TransUnion consumer credit report, and we pull your Experian credit report to make the approval decision. Fantastic. Thank you. Have a nice day. In 1 minute, I figured out who they report to. They report to my consumer credit reports. I do not want that card. Then he gave me the extra info of knowing that they actually use Experian. And Experian is how they actually make the decision of how I get approved. So this is what we do as a company. We have an entire data team that just gets this data and puts it in our software for our clients to actually access. If you're not using someone to help you, do this on your own. Find the credit cards you think will work best for you. A log like I just showed you. What are the terms of that? What interest rates are they going to charge? What's their credit score requirements? What's their softer credit pull, hard credit pull? How do you find out that info? Well, first, I'm going to look at Barclays Bank credit card, right? And then if I don't see that on the page where I apply, then I Google it. I say Barclays Bank Platinum MasterCard credit score requirement. And what's going to happen is it's going to tell me. Or I'm going to say Barclays Bank Platinum credit card. Do they do a hard or soft credit pull? If I pull that and Google that specifically, 9 out of 10 times, it's going to pull up the answer. It might not be with the application, but the answer will be there. This is going to help me determine the right types of credit cards to actually apply for. And again, just coming in, making sure all my questions are answered here. Adil says, hey, I'm a trucker too. I can afford to buy a high mileage truck for 15, 20 grand, but if the engine needs to be overhauled, I can't afford that 20 to 40K repair. Should I use credit cards for repair or not to buy? It's a great question. I'm going to throw this on the screen from DL. The answer is this is what business credit can do for you. One of the best uses of business credit is something called fleet credit. And with fleet credit, you can get repairs at almost every major fuel station in the country. A lot of them, like Shell and Pilot Flying, a lot of them have mechanic shops there, and you could use business credit cards to fund those repairs. So if I were you, DL, I would buy the truck and get financing for the truck. I would use credit card stacking if you could do it, or business credit to pay the down payment for the truck. Then I would use business credit cards without a personal guarantee or credit check to actually do the repairs and the maintenance for you. And St. Louis is in the house. Mike, thanks for coming in. And Lexus said, hey, I have to get my credit fixed from loans. I had to get my score up before I apply. Remember, Lexus, there's two things you want to do. Improve your consumer credit and build your business credit. When you build your business credit, that will give you the ability for your business to fund itself, regardless of your consumer credit quality. So some things to keep in mind there. Hey, welcome. Thanks for coming in. Oh, wait. Says, welcome in, Mike. Oh, I got my own account making comments here. I don't even know what's happening today. And DL, is it better to have your business accounts with credit unions versus big banks like Chase? I love this question. Let's talk about mastery of credit card stacking. Now, I'm going to answer this question. I'm going to teach you some things that you never even realized were possible with credit card stacking, so we can talk a little bit about how to maximize this. So now that we understand how credit card stacking works and the benefits of it, what it can do, then let's also come in and talk about the best way to do this. You don't even have to limit this to credit cards. You can actually expand this out to banks as well. Here's what you need to know. First of all, get your credit fixed. If you have consumer credit issues, you should work on getting those fixed. Yes, there are subprime credit cards with high interest rates, but the most amount of credit cards for credit card stacking are always going to be available to you if your score is above 700, and credit card stacking really becomes possible if your score is above 650. So you need to be working on disputing and adding positive accounts to your business or your personal credit reports, because those personal credit reports are going to be important for credit card stacking. Once we have our credit in pretty good shape, and by the way, you don't even have to use your credit for this. You can use somebody else's. I could use my mom's, my dad's, my sister's. I could use a friend, a relative, a potential investor. You just need somebody with pretty good credit in order to get approved for most kinds of credit card stacking. Now, once I have that, DL says, where do I go to get approved? Should I go to big banks? Should I go to small banks? Should I go to credit unions? If you really want to do mastery of credit card stacking, the answer is you want to do them all. You want to do them all. Okay, I'm not saying you have to do this, but I'm going to give you a deeper level to this. If I want to go and find my 5 or 10 credit cards and apply for them all in one shot, I can do that, and I'm probably going to end up with a good amount of funding. But another thing I can do is I can go to that bank I'm going to apply with that credit card for, and I can open a bank account and put very little money in there. So if I want to really maximize my money, how much do I mean, by the way? Let me give you an example of this. This is staggering. This is probably going to be shocking to you. One of my very good buddies does this for his business. He charges about $15,000 to $20,000 to coach people through this process. And what he basically is doing is having people go out, they apply, they go open a bank account at Bank of America, Chase, Regions. They open a bank account at the credit unions. They open a bank account at small regional banks as well. They let that get a little seasoning. Sometimes they're even transferring money back from bank account to show a little activity. Then about 3 months in, they go in and mass apply. In one day, they mass apply for credit at every single one of those institutions. If you don't mind, in chat, how much do you think he gets somebody on average on this process? Doing this process, let's say in 6 months' time, how much money do you think he gets by doing this? Just type in a number into the chat. Again, what he's doing is he's telling people to go in. They're opening a bank account at Bank of America, one at Chase, one at Wells Fargo. They're opening at Navy Federal Credit Union. They're opening into small regional banks. They're opening it up, letting it get some seasoning, maybe moving some money back and forth between accounts. Then he goes in one day and mass applies for credit with all those institutions. How much money do you think, nobody's helping me here, this strategy could generate on average? Okay. And thank you, Mike. You're the only person that had the courtesy to actually answer the question. And Mike says 100K. Very good guess, Mike. Who else wants to guess? How much money do you think this could generate? Anybody else? Okay, 150K, says CJ. I love this. And by the way, Eddie says, I can get my business credit from everyone but Equifax. You can't get Equifax credit reports from Equifax right now. They don't offer them. I can't. NAV doesn't even has credit reports with Equifax. The data is really limited, so keep that in mind. So NAV is your best shot right now to get Equifax data. Our clients get it directly from lender credit reports, but we can't even offer those to anybody outside of our client base. So if you're not our client, Eddie, if you are, you already get it from us. If not, you can check NAV. So here's the answer. $362,000. That's it. On average, his approvals are $362,000 every 6 months for clients that are using this kind of stacking strategy. So now that your ears are open, let's talk about how he did that, okay? So here's the question. And Jay, you can't say that. Jay is now answering after I've already given the answer. So again, let's look at how this is done. We're coming in, and I'm not saying you have to do that at this extent. There's a level like here you could do in a deep level. The easy level, there's 3 levels. First, hire somebody to do this. You can go to creditsuite.com/CLH, short for credit line hybrid, and we'll get you with the funding source that'll do this all the work for you. They charge like 9.99%. You'll usually get 5 to 8 times the amount of money you'd ever get on your own. The second thing is you do your own research and find the credit cards you want and make a log like I showed you. The log will have the name of the credit card issuer, hard or soft credit pull. It'll have their credit score requirements on there as well. All that information will be on a log. Then you decide the 5 to 10 credit cards you want to apply for. Remember, once you use these inquiries, you can't go back because the inquiries will hurt you in the future, but you got a shot, you do it on your own. Now, the third way to do this is a deep level to do this. And the deeper level, which takes more time, takes more energy, is that before you apply, you go open a depository account with that bank. So if I'm going to apply for a Bank of America credit card, I'm going to go set up a Bank of America account. I'm going to drop $50 to $100 in there. I'm going to drop $50 and $100 in Chase. I'm going to drop $50 to $100 in Regions. I'm going to drop some money in I'm going to create bank accounts and put a little bit of money in there for every one of these sources I'm going to apply for. I'm going to do it at the big banks, Chase, Bank of America. I'm going to do it at the regional banks. I'm going to do it at the small local banks and credit unions as well. I'm going to do it with all of them. I might have 10 to 20 different bank accounts I've set up with a little bit of money in there. I'm going to maybe let them sit for 1 month, 2 months, 3 months. I may even move some money from one account to the other to show some activity in those accounts. Then I have an application day. And on application day, I go stack. I go to every single one of those sources and apply for the credit card and apply for the loans, apply for anything they got. If Bank of America can give me a personal loan because I'm just starting a business and they can give me a credit card to start the business, I'm going to go apply for both. I'm going to go apply for whatever they tell me is money available for me in my situation. Startup, established business, whatever it may be. If you are doing this, historically, it will return hundreds of thousands of dollars in these cards to you, possibly even the same day that you apply. Again, the people that I know that do this at scale are generating over $350,000 every 6 months in funding they're able to get using this kind of strategy. So again, very, very powerful when we're using credit card stacking the right way, okay? Now, that being said, Wesley says, hey, Ty, just so I'm clear, the stacking process applies to personal credit cards and business credit cards, correct? Love the question. I'm opening this question up as well. And by the way, if you want credit card stacking, you can scan this QR code and talk to our finance team. They can actually go and do this for you. Okay, so now, that being said, Wesley says, is it personal or business cards? Let's talk about this. Personal credit cards are way easier to get than business cards. You need to have about a 650 personal credit score to get good personal credit cards. You need about a 680 to 700 score to get good business credit cards. So the short answer here is that it depends on how much money you want. If you only want cards that report to the business credit reporting agencies, you'll get about 10 to 20% of the total funding you could get. If you want funding that reports to consumer and business credit reporting agencies, that will get you about 5 to 10 times more money. So we tell our clients, go and apply to get as much money as you can get, which means personal cards and business credit cards. And then that gives you max access to funding. Now, you may choose to never use your personal cards, only use your business cards, but at least you have the personal credit cards there as a backup. Or you may decide to maximize on all of it and use all of the cards. The choice is yours. But to answer the question, it depends on how much money you want. If you want max funding, you should be applying for consumer credit reports, credit cards, and business credit cards as well. And Wesley says, hey, also, I'm a client at Credit Suite. Can I call in for help? Absolutely, you can. Tell them you want credit line hybrid, Wesley, and they'll talk to you more about this. Okay, so that being said, there's other really good benefits of credit card stacking. If you're working with the funding source, they will do inquiry removal for you. They will work with you to remove inquiries. So 6 months later, you can go apply for another amount of funding as well. That is something you want to consider. A lot of companies that do this can make that happen for you. The other thing that you want to keep in mind is you can also do a bridge loan for these credit cards as well. There's funding sources out there that will do that for you as well. And again, just scan the QR code. We'll get you to a funding source that can help. What is a bridge loan? I'm going to give you an example. A guy emailed me yesterday, very long email. He read my book, Business Credit Decoded. He said, I got a question. Here's my scenario. What should I do? Right? And so what happens is in his situation, he wants to get the maximum money that he can get. But the problem is, and he's got the good credit to be able to apply for as well. So the reason I say this is that what he's able to do is come in and be able to use his good credit to be able to apply and to be able to then get the actual funding that he wants to get using this kind of program. But here's the nice thing. He's got one credit card that has a high balance on it. And these balances don't work. If your utilization ratio is above 30 or 40%, it's going to be really hard to get credit card stacking. So these bridge loan companies will loan you the money to pay down your credit card to get credit card stacking done. So in his case, he's got one credit card with a $10,000 limit. He owes $8,000. Well, he'll get a bridge loan, pay $8,000 down to zero. Then he'll go get credit card stacking, get $70,000, $100,000 in funding. Then he'll use his $100,000 in funding to pay off the bridge loan he used to pay down the credit card. So some things to think about. You really want to have less than 6 inquiries in the last 6 months on your credit before you even start to apply for credit card stacking. So you need to work on inquiry removal. The other thing is that you also want to come in, and if you have one credit card that has a high limit, don't think that eliminates you, and don't try to waste your time waiting to pay that down. Get with a funding source that does credit card stacking, because they can typically give you a bridge loan to pay down that credit card. Then you get the credit cards from credit card stacking. Then you use it to pay off the actual bridge loan. So some other hidden benefits of credit card stacking that most people know nothing about. And again, Eddie, feel free to get in touch with us at creditsuite.com. Our phone number is there. We can talk to you a little bit more about getting you started as well. Now, DL says, hey, I started an LLC but haven't done any business. Can I get credit cards with a new business with no income? Absolutely. No doc, 0% cards. If you've got a 680 FICO score or higher, you could do it. If you're lower than that, you could typically use consumer credit cards to do it. So that being said, I'm going to go ahead and wrap up. Do not forget, scan the QR code or go to creditsuite.com/CLH, and we can help you get started with credit card stacking. Now, you know everything there is to know. The benefits, what credit card stacking is, how it works, the benefit it provides, how to get approved. Now the thing is go in and get approved. So you can go to creditsuite.com/CLH, or you can follow my advice here to do it on your own. Just keep in mind, you want to do it in a short period of time, because the more you use those inquiries, the more inquiries on your credit, the harder it's going to be for you to get other kinds of funding. So now you know how to get a credit card stacking. Now you know, and the best program out there for it's called Credit Line Hybrid. Scan the QR code or go to creditsuite.com/CLH to get approved. And Wesley says, so we use the money from the credit card stacking to pay for the bridge loan? Yes, that's the whole point. A bridge loan bridges the gap. It's a short-term fix till you get the money to pay off the bridge loan. So in this case, you have a credit card that has a high utilization. Your balance is high compared to your limit. You use a bridge loan to pay it off. Then you get credit card stacking approvals. Then you use credit card stacking to pay off the bridge loan. That's how that works. And this helps you. It's a little known secret to get you a lot more money, Wesley. So thanks for tuning in. Make sure if you got value here, you like and subscribe. DL says, does that mean you have to have the business checking account set up? No, you do not at all. Remember, I tried to break this down and said, you can just go have somebody do this. Don't set up any of those bank accounts and probably go get 50 to 150 grand without any problem. The other way is you could take all my advice and go do this on your own. The third way, that's way more complicated, is where you go open bank accounts everywhere, let them season, then do it. That will get you more money, but it's very complicated and time consuming. I just wanted DL to give you 3 different ways to do it. The easiest way to do it, scan the QR code or go to creditsuite.com/CLH. We'll get you to a funding source that does this for you. You can use the money you get to pay them. So it's rolled in just like SBA loan, and you don't have to do anything. All you do is apply. They do all the work, and they could typically get you $50,000 to $150,000 in business financing. So thanks for tuning in, everybody. Now you know credit card stacking, the art of it, what it is, how it works, the benefits. You know how to get approved at creditsuite.com/CLH. Make sure you like and subscribe, and keep your eye out for our next live stream. We're talking about more cool ways to get the money you need to start and grow your business. Take care. Have a great day.